Yeah, hi there. So last week was a down week after a couple of weeks of very strong markets going into record territory. It was the beginning of the earnings season, so we're finally seeing some data on earnings that are highly anticipated. And generally, the tone of the beginning of the earnings was very strong, and that was pretty much led by tech stocks, and I'll get into that a little bit more. So, other news. Look, we are having a heat wave here in New York City, which is unbearable, and we're seeing electric power outages in the city, which is weighing on certain companies and certainly retail behavior. We saw, on the other hand, if you want to get out of the heat, Disney's having a record weekend with its Avengers release, which is that new. It's now Avengers is poised to eclipse Avatar, which was their previous best successful launch in the summer. So Disney's a stock we like a lot that we own for our growth portfolios. I mean, other news, the Persian Gulf, we had a drone that was shot down by the U.S. military, and still have a tanker that's been seized in the Strait, which has to be resolved. So it's unclear. I mean, it's interesting that oil prices have not really moved on that. I think that's largely due to the fact that there is this perception that global growth is slowing, that demand is slowing, and there's a structural shift in the energy markets away from oil to other types of power generation, electric cars, and so forth. So, other news: Puerto Rico is in complete disarray. It's amazing what's going on there. We have a large client base in Puerto Rico, which are obviously partly being affected by that. It's interesting that the governor has announced he wants to stay on until the end of his term. I doubt that will be the case. Other news domestically, the talks on the debt ceiling continue. That's something to watch near term in terms of disruption for the market. I'm sure they will come to some conclusion to that, but it's still important for Congress, obviously, to vote to actually raise the debt ceiling. Macro data, we got very strong data out of June on consumer spending. Obviously, when we're at full employment and stock markets at record highs, that's typically good for consumer spending. We're seeing that amongst our companies. Also, on the manufacturing side, we saw some good data actually out of Philly Fed, which was interesting. We saw absolutely no reaction in the bond market out of those two data points. So the notion is still, or the narrative is still in the market that we're in a slowing trend, but certainly these two data points were stronger than not. Then last week we had the Amazon Prime Day. It's actually 2 days. This is where Amazon has created this sort of artificial day where they discount a lot of their products. It was a massive success. They had no glitches as compared to last year, where they had actual technical glitches where some of the websites weren't loading. But the result of the Prime Day was a larger. They had more revenues out of these 2 days than Black Friday and Cyber Monday both put together. So, I mean, it's just extraordinary. I mean, if you think about the fact that Amazon has more than 100 million Prime members now, this is an extraordinary money machine. Some of the statistics are, I mean, in the 2 days, they sold 100,000 laptops, they sold 200,000 televisions, 300,000 headphones, 350,000 beauty products, and more than 1 million toys. I mean, there are a lot of individual companies out there that would dream of having that amount of sales in an entire year, and Amazon did that in 2 days. So, Amazon continues to be a core holding for us. You can't value the stock based on PE ratios. It's an extraordinarily strong revenue growth story, and if you think of the market share that Amazon has in the retail business as compared to total retail, it's actually quite low. So in that sense, there's still plenty of low-hanging fruit there for Amazon to gain market share. On the other earnings front, we had very strong earnings out of Microsoft. Microsoft is probably our largest holding for our growth portfolios. Microsoft is sort of the perfect stock for growth investors, for value investors, for dividend growth type funds. It's really become a favorite for every type of portfolio style that you can see there. It's just they're hitting on all cylinders right now. If you think about their main business or their growth engine, which is really their cloud business. I mean, we've been at the beginning of the year we were quite adamant that the cloud story or cloud computing is not becoming saturated or somehow commoditized, but we're still very much at the beginning of this migration from an analog world or a installed database or server world to a cloud-based type of a business environment. We're still way at the beginning of that, and you can see that in the growth rates at Amazon, which is their AWS business, or certainly at Microsoft, which is now growing faster actually than AWS, and that's based on their Azure business. Azure grew 64% year over year. That's still a pretty amazing growth rate. And it's interesting, Microsoft's legacy businesses are still doing very well. So even their sleepy Windows business is growing around 10%. So that's pretty impressive. So they continue to post incredible numbers, and we're very comfortable being overweight Microsoft and having that be our largest position. Then on the healthcare side, we got also some very good news out of Abbott Labs. Abbott Labs is a very diversified healthcare company, and they beat their earnings pretty handily, raised guidance, which was very important in this environment where everything seems to be slowing. So in terms of the main types of businesses they have, medical devices, that business has organic growth over 10%. Their diabetes care business is growing actually at 35% plus, and then newer devices like for heart failure and so forth are growing at 25%. So, these are really extraordinary growth rates, and given all the negative news we've heard this year in the healthcare space, and certainly healthcare stocks have underperformed in a strong market. These are really bright spots and the areas that we like to invest in. So in Abbott Labs or Boston Scientific, Becton Dickinson, these are the types of diversified companies we like to invest in. So that kind of sums it up for the week. We'll continue to see a lot more data on earnings in the next couple of weeks. Some of the big tech companies are scheduled to have their earnings out. The markets continue to be driven by those big tech stocks, and we don't see any change to that anytime soon. And on Friday, we will get another look at second quarter GDP, which we expect to be a bit lower, so it's going to be another interesting week. So that said, stay cool, and we'll see you next week.